Yes, welcome to this session. I want us to look on an illustration question regarding the computation of earnings per share. And specifically, I want us to look on this question for November 2018, specifically question number 5, B and C. So we start with part B, and it reads, discuss the significance of earnings per share in the analysis of the performance of a company. So here, candidates were required to discuss, or in other terms, to explain the significance of earnings per share in the analysis of the performance of the company. So part B was requiring a candidate to explain significance of earnings per share, significance of earnings per share. So recall in our previous session, we talked about some of the benefits, or basically some of the significance of these earnings per share, which has to be computed, disclosed by all listed companies. And some of those particular significance, we said, number one, it can be used to evaluate a company's profitability. So mean that the shareholders can use these earnings per share to know how the company generally is performing. Number two, it is used to compare financial performance of different entities within the same industry, So mean that the shareholders can use these earnings per share to compare performance of different companies within the same industry. And number three, we can say that it is used to compare financial performance of an entity in different years. So, and finally, we can say it is the basis of computing price earning ratio. It is used by the company in computing the price earning ratio. So therefore, these are basically some of the significance of earnings per share, and basically candidates by giving those particular significance or those importances of earnings per share, they were earning 4 marks. So let's move to part C, which involves some computation, and it reads, IAS 33 earnings per share set out the requirement for calculating and disclosing the basic earnings per share figure for quoted entities. The following information appeared in the consolidated income statement and other comprehensive income of 𝐕𝐨𝐬𝐧 Limited for the year which ended 31st of July 2018, together with the comparatives for the year which ended 31st of July 2018. So we are given the income statement and other comparative income for 2018-2017. We have profit before tax, income tax, profit after tax, other comparative income, which include revaluation gain on land. We have total comparative income, and then we have the profit for the year attributable to the owners of the group and attributable to non-controlling interest. We have total comprehensive income for the year attributable to the owners of the group and non-controlling interest. Then we are told the statement of financial position extract for the year which ended 31st of July 2018, together with the comparative for the year which ended 31st of July 2017, were as follows. So we are given those figures for 2018 and 2017. We have the equity share capital, 4% preference share capital, share premium, other equity reserves, and controlling interest, retained earnings, and then we have the total equity. And then you're told during the year which ended 31st of July 2018, the following changes took place in relation to the issued share capital of 𝐕𝐨𝐬𝐧 Limited. Number one, you're told 100 million equity shares were issued in relation to the acquisition of another business. These shares were issued at full market price on 1st November 2017. Number two, we are told 150 million ordinary shares were issued for cash to existing shareholders on 1st February 2018. The issue price was the shillings 1.5 per share, which represents a discount of 25% on the traded price of shillings 2.0 per share immediately before the issue. Number three, on 30th of June 2018, a bonus issue was completed by capitalizing shillings 135 million of the retained earnings. And 4, we are told on 31st of July 2018, the preference dividends for the year and equity dividends of shillings 23 were paid. So from this information, number 1, we required to compute the basic earnings per share for 2 years, the year which ended 31st of July 2018 and the year which ended 31st of July 2018, 10 marks. And number 2, we are required to compute the comparative earnings per share for 2017 to be reported in the 2018 financial statement. And then in that case, we are told the earnings per share, the EPS figure reported in 2017 was 0.525 shillings. And in that case, the candidates were given to a mark. So let's start with the Roman 1 of that question, whereby the candidates were required to compute the basic earnings per share for 2 years. Basic earnings per share for 2 years. So Roman 1, basic earnings per share for the year which ended 31st of July 2017 and 31st of July 2018. So automatically, we're going to start by computing the earnings per share for the first year. So therefore, it is important, first of all, to note that the information which are given here, we're given information for 2 years. For 2 years, the first year ended on 31st of July 2017, and the second year ended 31st of July 2018. So let's start by computing the basic earnings per share for the first year. And for us to compute this basic earnings per share, the first thing we need to recall is the formula. How do we compute the basic earnings per share? How do we compute the basic earnings per share? So to compute the basic earnings per share, we take the PATOS, the profits attributable to ordinary shareholders, and then we divide that with the weighted average number of ordinary shares. So we divide that with the weighted average number of ordinary shares. So that is the first thing we need to remember. And therefore, having those or having the formula, we need to compute these 2 items. So let's start by computing the PATOS, which is the profits attributable to ordinary shareholders. So if you can be able to remember what we discussed in our previous session, we say that to compute this, the profits attributable to ordinary shareholders, popularly abbreviated as PATOS, popularly known as PATOS, we take the company's profit after tax. To this, we less the preference dividends for the current year. Preference dividends for the current year. If we happen to be computing the earnings per share for a group of companies, to this we also less the profit attributable to the non-controlling interest. And actually, here we are computing earnings per share for a group of companies. That's what we are told in paragraph number 2. So in 2017, or we're given the profit after tax for 2017 is the 240 million. That figure is already given at a paragraph 240 million. So to this, what do we need to do? To less the preference dividends. So how do we compute the preference dividends for this year? So to compute the preference dividends, we use the information where we are given the statement of financial position extract. And we are told that at the equity share capital, this company had issued 4% preference share capital, preference shares. So basically what that means is that this company at the end of each year should pay preference dividend equal to 4% of the preference share capital. The preference share capital for 2017 was 100 million. So 4% of that will give us 4. And then to this, we also less the profit for the year attributable to NCI. That is given in the income statement, which we have at the paragraph 2. We are given the profit for after tax attributable to the owners of the group and also attributable to non-controlling interest. So our interest here is the profit for the after tax attributable to the non-controlling interest, which is given as 30 million. So this will give us the profit attributable to the ordinary shareholder. So let's compute this. We see what it will give us. So we have 240 minus 4 minus 30. So this will give us 206 million. So this 206 is what we refer as the PATOS, the profit attributable to ordinary shareholders. So having computed such, then we need to proceed and we compute the one-off, the weighted average number of ordinary shares. So recall what we said. To compute this weighted average number of ordinary shares, so first of all, you need to determine how many ordinary shares were issued at the start of the year, and then to this we add the other shares which were issued during the current financial year. And actually, you have to remember specifically how we treat the shares which were issued during the current year for the purpose of computing the one-offs. And take into account this year, the financial year of this company is ending July, so it means that the year is starting 1st August. So this year therefore started 1st of August of 2016. So what we need to do here is to determine how many shares were issued at the start of this year. And now all our figures here are in million of shillings, So if you check on the information which you are provided here, first of all, if you go to the addition information, number 1 up to note number 4, there is something we are told. Before note 1, we are told during the year which ended 31st of July 2018. That is the second year, because here we have 2 years. So that is the second year. So the year which ended 31st of July 2018, the following changes took place in relation to the issued share capital. So basically what that means is that the transactions we have in note 1 up to note 4, those are transactions for the second year. So therefore, as far as the first year here is concerned, we are not given any information regarding some shares which were issued in the first year. But if you go back to the statement of financial position, which we have just above the additional information, we are given the equity share capital of this company at the end of this year. So therefore, we can be able to determine the shares which were issued by the company at the end of year 1, the year which ended 31st of July 2017. Because how do we determine that? We take the equity share capital of the company at the end of the year, we divide that with par value per share. The par value per share, we have it there as 0.5. So what this will give us are the shares which were issued by the company at the end of the first year. So we have 200 divided by 0.5. So this will give us 400 million. So basically what that means is that in our case, we only know the shares which were issued at the end of the year. And take into account there is no transaction we are given regarding the shares which were issued during the first year, then in that case, we assume that there are no shares which were issued during this year, and therefore, the shares which were issued at the start of the year here will be the same with the shares issued at the end. We are not told during this year there were some shares which were issued. So basically what that means is that the shares which were issued at the start of the first year here were 400 million. And then in this case, we are saying that during the first year, there was no issue. There were no shares which were issued, because if there are any, then we come and we add them here. So basically what that means is that the weighted average number of ordinary shares for the first year will be how much? Or will be 400 million. So, and basically having those two figures, we can then proceed and compute the basic earnings per share, which will be equal to the PATOS, which we have here, 206 million. We divide that with the one-offs, which we have here, 400 million. And the answer which we get here, we give it as shillings per share. So let's divide those two figures. So we have 206 divided by 400 million. 400 million, which will give us 0.515. So therefore, this is the earnings per share for that year. And generally, what is marked in such a question is this one, computation of that PATOS, and also the computation of what? Of the one-off. So therefore, that is first of all, what was required here as far as the computation of earnings per share for the first year is concerned. So let's then move and compute the basic earnings per share for the second year, which ended 31st of July 2018. Equally, in our case, we're using this formula here. Remember here, we are computing the basic earnings per share for that year. Basic earnings per share for the year which ended 31st of July 2018. We don't need to repeat our formula, but we need to know that to compute that basic earnings per share, this is the formula which we use here. So we need to compute the PATOS one-off for 2018. So let's start by computing the PATOS, the profit attributable to ordinary shareholders. The computation of this remains the same as what you have done here. So we start with what? The profit after tax. To this we less the preference dividends, and also we less profits attributable to ordinary shareholders. So whatever you're going to get there will be our PATOS. So what is the profit after tax for 2018? So this is given as a figure of 325. So to this, we need to less the preference dividends. The preference dividends, we compute this using the information we have just at just above the additional information, because we have the preference share capital. So the preference shares issued by the company of 4% times the preference share capital for 2018. So actually this one will not change. It remains, the preference dividend for that year remains 4 million, just like 2017. And then we less the profit attributable to NCI, which is given in the income statement up there. Profit after tax attributable to non-controlling interest, which is given as 45. So basically, by doing that, we get now the profit attributable to ordinary shareholders. So this will be a figure of what? 325 minus what? Minus 4 minus 45. Minus 45. So that will give us what? That will give us a figure of what? Of 276. So that is the PATOS. And then from there, we need to proceed and we compute the one-offs, weighted average number of ordinary shares. So to compute the weighted average number of ordinary shares, we have to take into account the shares which were issued, the ordinary shares issued and prepaid at the start of this year, plus the other shares which were issued during that year. So therefore here, what we start with are the shares which were issued at the start of the second year. Remember, this second year started on 1st of August 2017. So what we always start with here are the shares issued and prepaid at the start of the year. And basically, what we know is that the shares which were issued and prepaid at the end of the first year here will be the shares issued and prepaid at the start of the second year, are the shares issued and prepaid at the end of the second year here. So, and basically what we know is that the shares issued and prepaid at the end of the second year is now what we have computed here as 400,000. As 400 what? 400,000. So therefore, those are the shares which will be issued and prepaid at the start of the second year. And then out to this, we add the other shares which were issued in year 2. And actually, we're given those particular transactions in the additional information. Let's start with the additional information number 1, where we are told 100 million equity shares were issued in relation to acquisition of another business, and these shares were issued at full market price. So therefore, what we say here is that on 1st November 2017, we describe that particular transaction as issue at full market price. Now, you have to recall what we said in our previous session, that such shares which are issued at full market price are supposed to be multiplied with the proportion of time they were held during that year. So basically, these shares were issued from 1st November. So they were held for how many months? So they were held in November of 2017, December of 2017, and then how many months in 2018? 7 months in 2018, because you can see that here was ending July. So these shares were held for 9 months out of 12. So in that case, we say that those particular shares have been weighted on time basis, So we have 100 million times 9 divided by 12. So which will give us 75 million. So that's basically how we deal with such shares which are issued at full market price. Number 2, we are told 150 million ordinary shares were issued for cash to existing shareholders on 1st February of 2018. So, and we are told these shares were issued at a price of 1.5, which represent a discount of 25% to on the traded price of 2.0 per share immediately before the right issue. So in this case, there is this point, the examiner tried to trick the student because these are right issue, but the examiner did not clearly specify it is a right issue. So right issue has 2 features. Number 1, the shares always are issued to the existing shareholders. Is that feature there? Yes. Number 2 is that the shares, or during the right issue, the shares will be issued at a discounted price to the market price. Is that the case? Yes. So therefore, this is a right issue, but the examiner here did not specify that, basically to try and catch most of the students. So you have to remember what we said in our previous session, that anytime the company has made a right issue, the shares which were issued must be split into two components. The shares issued at full market price and those shares which are issued at nil consideration. In this case, for us to do that, to split these shares into two components, we need to determine how many shares were issued during the right issue. Though in our case, we are told the shares issued during the right issue were 150. And number 2, we compute something known as the theoretical X-right price. So how do we compute this theoretical X-right price like in our case here? Number 1, we need to determine how many shares were issued by the company during the right issue. And then we also have the shares which were issued by the company during the right issue. So what we need to do to determine the total shares issued by the company during the right issue, we can't get that in the question. We can only get it here. So in our case, we know that before this right issue was issued, these are the shares which were issued by the company. And the shares issued are not these plus these, because the actual shares which were issued here were not 75, but rather they were 100. So therefore, the shares issued by the company before the right issue will be 400 plus the actual shares here. That is 100. So that will give us 500. Those are the total shares which were issued by the company before the right issue. Before the right issue, the shares issued were 500 million shares, and they had a market price of how much? They had a market price of 2 shillings. And then during the right issue, the company issued 150 million shares at a price of 1.5. This will help us, or this basically how we compute what we refer to as the theoretical X-right price, the market price per share after the right issue. So we have 500 times 2, which will give us 1,000, and then 150 times 1.5, which will give us 225 million. So we add these two, and then we also add this, which will give us 650 million. So to get the theoretical X-right price, we take whatever we have here, because this is the total market price of all these shares, and then we divide that with 650, because in our case here, we're interested with the market price per share after the right issue. So this will give us shillings 1.88. So this is the market price per share after the right issue. And basically having that, then our question becomes very simple, because now what we just need to do is we split these shares into two components. So first of all, we need to determine the issue at full market price. How do we determine this? I gave you the formula in our previous session, and we said we compute the amount received during the right issue, which will be equal to the shares issued times the exercise price per share. So the existing shareholders were issued with the shares at a price of 1.5. So that will give us the amount received. Then we divide that with the theoretical X-right price, which is 1.88. And then these particular shares must be weighted on time basis. They must be multiplied with the proportion of time they were held. Remember, this right issue was made on 1st of February 2018. This how many months to the end of the year? We have February, March, April, May, June, July. So they were held for 6 months out of 12. And then 2, we determine the bonus element. The bonus element. How many shares were issued free of charge? To determine this, we said we take the total shares issued during the right issue minus the shares issued at full market price. The shares issued at full market price is not the answer which you're going to get here, but this is how we compute the shares issued at full market price. So we just transfer what we have here down here. So this will give us the shares issued at full market price, and equally these particular shares are not supposed to be weighted on time basis, because they are shares issued at nil consideration. Let's first of all we compute this. 150 times 1.5 divided by 1.88, and then times 6/12, or basically divided by 2, which will give us 59.84. And then we compute this bonus element. 150 times 1.5 divided by 1.88, then deduct that from 150, which will give us 30.8. 30.32. So basically that's how we deal with the right word issue. These are very common concept in all questions for earnings per share. So therefore it is important for you to be able to deal with that word right issue. Finally, note number 3, we are told that on 30th of June 2018, this company made a bonus issue. So let's deal with that, or basically we consider that bonus issue, and we are told on 30th of June 2018, the company made a bonus issue. Bonus issue, remember, these are shares which are issued by the company free of charge. And actually, we are told the company made a bonus issue by capitalizing 135 million shillings of the retained earnings. It is important to note that whenever the company make a right issue, always the shares are issued at their par value. And therefore here, because you're given the total value of the shares which were issued during the right issue, we are told they had a value of 135. We need to determine how many shares were issued. How do we determine that? By dividing that with the par value per share. The par value per share is what we have in the statement of financial position, which is 0.5. That is the par value per share. That is how we compute the shares which were issued by the company during the right issue. So 135 divided by 0.5, which will give us 270. And also it is important to remember that these particular shares are not supposed to be weighted on time basis. And also we use them to restate the earnings per share for the previous year. So take into account in number 4, we are given information about dividends. We don't use that here. So what we need to do is we add all what we have here, so that we get what? The weighted average number of ordinary shares. So we have 400 plus 75 plus 59.84 plus 30.32 plus 270, which will give us 835.1 So that is the weighted average number of ordinary shares. And take into account we already have the patos. We need to proceed and we compute the basic earnings per share, which will be 276 divided by this. And this will give us what? So we have 276 divided by 835.16, which will give us shillings 0.33 per share. So basically that is it. That what was required. And equally what is marked in such a question is that computation of patos, and also this computation of what? The weighted average number of ordinary shares. So we are through with Roman 1. And then Roman 2, what we are required to do is we are required to compute the comparative earnings per share of 2017 to be reported in financial statement of 2018. In other terms, what the examiner was requiring the candidates there to compute is the restated or adjusted earnings per share over 2017. Remember here we have 2 years. We have 2017 and 2018. And actually we have said whenever you're given information about 2 years, 2017, 2018, and it happens that in 2018, the most recent financial year, the company issued some shares free of charge or bonus shares, you have to use them to restate the earnings per share for 2017. So how do we compute this? We take the patos, the profit attributable to ordinary shareholders for 2017. We divide this with the weighted average number of ordinary shares, weighted average number of ordinary shares still for 2017. And then to this we add the bonus shares which were issued in 2018, So basically in our case, the one was for 2017, what we computed, what we used to compute the earnings per share for 2017 was 400 million. And then can I be able to remember the figure for the patos? Yes, for the patos, it was 240 minus 4 minus 30. Yes, it was 206. That was the patos. And then to this, what do we need to add? We need to add the bonus shares issued in 2018. So where do we get that? From our computation here. In our computation, first of all, we have this bonus element, which is 30.32 million. And also we have this bonus issue of 270 million. So this is how we compute the restated or the adjusted earnings per share for 2017. So this, let's first of all, we compute the denominator as 400 plus 270 plus 30.32 which will give us 700.32. So we have 206 divided by 700.32. So which will give us shillings 0.294. 0.294. Yes. So basically that's how we compute that restated earnings per share for the year 2017. Basically that is it. That what is required as far as that illustration is what is concerned. And actually that brings us to the end of that session. So for now is a bye.